Fancy. All right. Uh-oh. Sabrina, will you click that?
Just put got it. Perfect.
All right, awesome. Good evening, Craig. Thanks for hopping on again, buddy. We're so excited to have you.
Great to be here.
I'm going to introduce myself because, again, we're going to share this out to all of our awesome people, but I'm Brianna with the Paradise team, and we are here to learn how to protest your taxes. We had Craig on last year, and he had some awesome golden nuggets. I had a few clients sign up under Home Tax Shield, and they did save money. So it is super awesome, the information you guys have to share. And then I just want to thank all of our sponsors. We have We Write Mortgages in the building. Whoop, whoop. We have Shoreline Title, Josh Butler with South Texas Inspections, Bella LeBrew, Achosa Home Warranty. Who else do we have? Ruben Bonilla with Farmers Insurance. Do you want to come say, hey, girl? Sorry, we got a lot of awesome sponsors for this event this year. So awesome. Home insurance, we got you covered. Home warranty, home insurance, lenders, titles, some good coffee, and a good home inspection. So without further ado, Craig, we are going to let you take the floor. Thanks for being here.
Yeah. Thanks, Brianna. Thanks for having me. It's good to be with everybody tonight and talk about one of my favorite topics. I know it's not in general favorite topic of folks, but it is a hot topic in Texas for sure. It has been particularly for the last few years, given where the market's gone. And one of the things I like to do in these webinars is I want to run through kind of a pre-canned presentation that we have that covers a lot of basics about our process, some things that we find that quite a few folks don't understand as well about the process and about property taxes. And then save as much room as y'all want to stomach for Q&A, because one of the things I like to hear is the stories that people have engaged with when it comes to their taxes. A lot of very unique situations in property taxes. Just every year I do this, whenever I think I've heard everything and seen everything, there's some other situation or story or twist that comes around. So you might have one of those. We can talk about it, and I'll do my best to answer your questions and the like. But what I'm going to do at this point is run through some of these slides, and let's see if I can share effectively. Share. Holler if that showed up on the screen.
You're golden. We can see it.
Yay. All right. All right. So property taxes 101, we'll walk through some basics, but just to give a little street cred, been in this business for 4 years. God, what is it now? 4 or 5 years, which is actually not very long. But we are already in 48 counties across Texas. We're founded on a really basic principle that every single homeowner in the state of Texas deserves to get a fair tax value from their county. The counties do strive to do their best with what they got and what they can do. But as everybody knows, there are flaws in the system. And that's the whole purpose of the protest process, is to identify the flaws, get them fixed, and save you money. And so we have a really simple value prop in terms of our engagement. It's $30 per home and 30% of tax savings. So it's super cheap. Every homeowner can afford that. And we do all the work after you sign up. You don't have to do anything else. And if anybody has engaged with the protest system before, you know it can be quite an ordeal. We've gotten over $1 billion in reductions the last few years in our short time being around. Have a really high success rate. So not everybody gets savings or reductions, but most people do. And since you never really know if you're going to be in that group or not, it's always best to protest every year. And so a lot of those reductions result in some really meaningful savings for homeowners. Up over 13 million bucks at this point in time. So lots of good lessons we're learning across the state in different counties, and every county operates a bit differently. I hope this doesn't really capture too many folks on the call, but 85% of people don't protest, which is really kind of sad because it's like letting the IRS guess how much money you made last year and taxing you on that and you accepting it. That's what not protesting is similar to doing. So just like you can file your taxes and tell them how much money you made and file all your deductions and get truly a fair tax from the IRS, you can do the same thing with your property taxes in Texas. And that is why the protest process exists. In case you are one of the 85% that doesn't protest, just so you can see what all of you collectively are leaving on the table, it's over $1.3 billion in unclaimed savings that you can only get if you protest. And those are estimates that we look at based on if the average person got the average result and everybody did it, that's what would happen. So there's a lot of savings on the table. Make sure you get yours and make sure you protest. Probably one of the most important things in the business of property taxes and protesting is our dates. The most important date is January 31st. And that is when you are required to pay your property taxes by every year. Never miss that date. If you miss that date, you will be in a world of hurt. The county will effectively own your home at that point. So you never want to miss January 31st. A lot of y'all escrow your property taxes with your mortgage company. They will pay it sometimes in December, maybe early January, and take care of that for you. And they should never miss that date either. The next most important date is coming up here soon, and that's May 15th. And that's the date to officially file a protest. Either file it yourself or hire a company like ours to handle it for you. You have got to do that before May 15th. Unlike the IRS, where you can request a delay in your filing date, you cannot do that in property taxes. If you miss May 15th, then you are out of luck for that year and you cannot, you have no chance to protest that year. So one twist that does happen, particularly in some of the counties down south in South Texas, sometimes they'll get their notices out a little late. They won't get them out by April 15th. They might come out April 20th, April 25th, sometimes as late as May 1st or even later. In those cases, you actually have 30 days to file your protest after they sent you the notice, not after you received it, after they sent you the notice. So if they didn't send you your notice until May 1st, then your deadline is actually June 1st. But it's really hard to keep track of that for every county every single year. So we always tell people, just get your protest in May 15th. Don't even wait for your value. Don't even wait for your notice, because if you think you're going to look at that number and be happy with it, then there's a good chance that you're missing something and you should protest anyway to make sure it's actually right. So the other things that happen in this business is kind of, June, July, and maybe even August. We do a lot of the hearings. Those get wrapped up usually by August, and results are sent out after that. And then November is when everybody gets their tax bills for the value that they were given back in April. And so when it comes to dates, this is one really important gap in a lot of common understanding around property taxes. When you get your value in April from the county and you protest it, and then you get the final one in June, July, and you pay that bill in November or December, that value was based on January 1st earlier in that year. So a long time ago. And the value based on January 1st was looked at data in the prior calendar year. So even before the entire prior calendar year. So what that means is your value that you get is oftentimes anywhere between 9 and 15 months behind the actual real estate market. So if you're staring at your value in April or in May or June or paying your bill in November, you're going, why am I paying so much in taxes? The market's gone down. That's why, because the property tax system trails the market by at least 9, sometimes as long as 15 months. So keep that in mind when it comes to dates. So why bother protesting? Like I said before, this is your only chance and your only way to make sure you don't get overtaxed. 83% of our customers end up getting a reduction. And so that means 17% don't. The ones that don't, when we go through our process and you protest fully with the professional and you don't get a reduction, that's actually what guarantees that you got a fair value. So it's a great value and a great benefit to get the answer to that question. But for the folks on average that do save, when you do this every single year and you keep downward pressure on your value, your market value, then over time, it's compound savings. Just like y'all know what happens if you get too much compound interest on your credit cards. This is the opposite. This is compound savings over and over and over again. Every year, you keep that pressure down and you benefit from that. And not just in the savings you get that year, but it builds on itself every year. So again, why bother to do this? You don't want to be overtaxed. Maybe some people do, that's fine, but I don't want to. You get to save some money. You get to help your neighbors. And so if you're the only one in your neighborhood not protesting and everybody else is trying, then your value is elevated. It's left up there and you're kind of hurting everybody else's chances of getting a lower value. So we consider this a team sport and encourage everybody to do it. And then lastly, there's nothing to lose. You cannot, by law, the counties cannot raise your value in a protest just because you come in and protest. Now, you don't want to come in and share a bunch of information that's going to hurt you for next year, but in that year that you protest, they can't raise your value. So there's literally no risk. It's just your time or your money. You're hiring a firm like us to go handle it for you. And that's it. So let's talk about values, because this is one of the most commonly misunderstood things about property taxes and actually home ownership, period. If you look at this slide, there are 10 values for your home. They're all different and they're all correct. So think about that for a second, because it's a bit of a mind bender. How can I have 10 values for my home that are all different, but they're all correct? And that's because they're used for very different purposes, and they're also constructed by very different means. And so when it comes to real estate agents that are working on buying or selling a home and trying to get to the transaction, those 3 values at the top, that's where they live. They want to know what the buyer's willing to pay, what the seller's willing to sell at, where can they find that marriage to create a transaction. So that's actually 3 different values that they play with up there. Then you get mortgage, replacement, and insurance value. These things can be different values, even different than where you transacted at. And so that's a whole nother set of values. And then we get to the 4 for property taxes. And there are 4 values that are important to property taxes. Everybody knows the kind of the bottom 2, the appraised or the market value. That's the value that is officially protested. But if you have exemptions or other things that will lower your appraised value, you might have a different assessed value, which is what the value that you're taxed on. Now, I'm going to jump to the next slide. We're going to talk about tax equity and tax sales value here. So what are those? So the county doesn't come up with a single appraised value for your home. They actually get to that appraised value by coming down 2 different paths. One is called the equity value path, and the other one is the sales value path. These are 2 different valuation approaches that the county pursues. They oftentimes end up with different numbers, and then they bring them together and figure out what is their single appraised value. The reason this is important for you to understand is because when you go protest that appraised value, then you can, if you have the data and the wherewithal, you can attack both the sales value and the equity value. A lot of people only think about sales and bringing in comps and trying to get their taxes lowered like that. And that can work and it can help. It hasn't lately because comps have been typically really high. But people forget about the equity value. So what's the difference between the 2? So they work exactly the same, but when you look at the data set that you can choose from on the sales side, you can only choose homes that sold the prior calendar year. That's where we go get me some comps of what sold last year. Let me use those. And that's the sales side. On the equity side, you can use all of the values in your neighborhood, all of them, even if the home didn't sell. And the reason you can do that is because the county by law is required to provide you a value that is equal and uniform to all of your neighbors. And so that is a requirement that they have to meet. And if you can catch them not meeting that requirement in some way, then you can get a reduction and save some money on your tax bill. It is a harder argument to make, the equity one. The data is a lot harder to deal with because there's a whole bunch more of it. That's why we have big computers to help us with all that stuff. But just keep in mind, those are two different arguments you can make to try to get your value down. The other important thing on this slide is once you get your protest results, look where this sits in relation to exemptions. A lot of people get confused that, well, I have exemptions and so I'm protected. I don't need to protest. And they're missing this fact that protest results are applied to your math before your exemptions are applied. So you can get both protest and homestead exemptions applied. That's the best case scenario. And so just because you have an exemption and it's saving you some money, which is fantastic, don't forget that you can protest and still save even more money. So when it comes to the exemption caps, that's where that assessed value comes into play. And we have a lot of those situations coming in the last couple of years because of the way the real estate market has gone. And so you would be capped whenever you have a cap, you're capped on your assessed value. And it's your assessed value that determines how much taxes you owe at the end of the day. So when you have a cap, you could very well have an appraised value that's higher than your assessed. And by definition, when you have that situation, you have a cap in place and it's helping you save some money. All right. Now some of the gory details that we can talk about how to protest like a professional. So this is the process that we go through and what we do to give our clients the best chance to make sure that they get a fair value and capitalize on any savings opportunities that they have. So never miss a deadline. That's number one. And we never miss a deadline. The two things we just talked about, the sales argument and the equity argument. We have two different data sets that we deal with to create each of those arguments for every home that we protest. So you got to get the sales data and adjust it. You got to get the county data to do the equity argument. You got to get all the county data and you adjust it. We're going to talk about what adjusting means here in a second. But it's the most arduous part of the whole process, the adjusting part. Then once you adjust everything and you look at it, you get to pick, okay, do I want to argue sales? Do I have a sales argument? Do I want to argue equity? Do I have that? And you get to choose. Sometimes in rare situations, you might have a home that is in need of severe repairs. And these only help if it's severe and major repairs, like foundations and roofs. Other than that, nothing else helps. Don't bring in estimates for your HVAC system or the fact that your house needs paint, or your fence fell down or that kind of stuff. None of that will help. And we typically ignore that. In fact, we put up our savings numbers and our reduction numbers, and less than 6% of our customers upload anything to our system for us to use. So we pursue a truly pure data approach when it comes to protesting and taxes. So lastly, you got to schedule your hearing date. They'll schedule it for you. Sometimes they might call you in advance and do what's called an informal hearing to see if you're willing to, take an offer that makes you go away. So you don't have to go to the ARB and they don't have to go to the ARB because it's expensive for the county to deal with all that system. So you might have that. Sometimes some counties don't do that at all. They'll just shove you right to the formal hearing, and that's where you go in front of the panel, argue your case while the county argues their case, just very much like a jury. And then the ARB will decide at the end of the day what the answer is. So last thing is, when every year you get one shot to protest, only one shot. So if you want to take your shot, that's cool. Get ready and make sure you do the best you can with the shot you're going to take. You can't take a shot and then call us or another firm. You can't take two shots. It's not allowed. So make sure you decide whether you want to do it or whether you want to hire a professional to do it, but you only get one shot each year. So let's talk about those adjustments, because this is one of the least known parts of property taxes, and it's quite complex. And so you're looking at an example of one of our adjusted sales grids. And on this, you see a whole bunch of characteristics about the homes. You see the sales prices for the homes, and then you see what's called the adjusted sales prices for the homes. For this, because the property tax appraisal system requires adjustments like this. This is why we highly discourage homeowners from going into a protest with raw sales comps or a CMA. Those raw sales comps are not adjusted per property tax law. And if you can see down at the bottom, most of these sales comps got adjusted higher. Now, they still helped this homeowner, but they didn't help nearly as much as the homeowner would have thought if they just dealt with raw sales comps. So if you take raw sales comps into a protest and don't adjust them, you are putting yourself at risk of actually doing yourself harm in a protest and ruining your chance for savings. And so this is why we really encourage folks to hire a professional that does this stuff and can do it really well. Couple of really, I don't want to say controversial, but really interesting misconceptions around exemptions. We're going to talk about the homestead exemption here, and then the next slide, we're going to talk about the over 65. The homestead exemption has changed a lot, and even just in the last 4 years. So for those of y'all that have been around a little bit longer than that, you might remember that the homestead exemption used to give you a $25,000 credit on your value every year. Well, a few years ago, that $25,000 credit got raised to 40, and last year that $40,000 credit got raised to 100. So that's fantastic. So that's your legislature at work trying to help you guys save money if you have a homestead exemption. And so now when you get approved for this, you get $100,000 credit every single year on your value. Again, whatever value they give you minus any protest results, and another $100,000 credit after that. So with most tax rates hovering somewhere around 2% in Texas, that's $2,000 in your pocket every year for having the homestead exemption. It's a big deal. That's a lot of money. That's not really the complex part of the homestead exemption. This slide is more complex than that so that we can try to explain the cap. So, and this is where a lot of people get tripped up. So the way the homestead exemption works is now you are allowed to apply for that in the year you move into the home. Used to, you have to wait until January 1st the following year, but now you can actually apply right when you move in. But in order for the cap to start, you have to develop what's called a base year. And your base year has to be January 1 through December 31st. One full year is your base year. So if you buy in July, that doesn't count as your base year. You got to go to the next year, and that will be your base year. So the year you buy and then the year that's your base year, you don't have a cap. There is no homestead cap protecting you in those first 2 years. It's that second full year or the third calendar year where you finally get the cap. And this hasn't changed. It's always been like this, but it's definitely tripped people up. The last couple of years, we have hit caps across the state. like crazy. I'll show you a slide in a minute of what's happened there. But keep that in mind, particularly for real estate professionals and mortgage lenders. Make sure you're in closing settlement professionals. Make sure your clients are very well educated on when their cap's going to start and when it's not, so they don't get surprised by a much higher tax bill than they expected. On the over 65, we have a very similar structure. You get a $10,000 credit. Now, this can vary based on your particular school district, or in your area, your taxing entities get to choose how much they give you. But this is about what typically we see across the state, a $10,000 credit. And just like the homestead has a cap, the over 65 exemption has what's called a freeze. And just like the cap on homestead, people are confused and misunderstanding how the freeze works. And where they're confused here is that the year you turn 65, that is your base year for your future freeze. So what that means is, and this is what we get a lot of time, people will chat in and cancel our service and they say, I turned 65 this year. It's actually the most important year ever to protest is the year you turn 65, because whatever taxes you pay in the year you turn 65, that's the amount of taxes that will be frozen in the future. So your freeze technically starts the year you turn 66, not the year you turn 65. So, and the other important thing about the freeze is in most areas of Texas, your taxes are frozen only on your school, not on everything else. And for most people, their school taxes are probably about half of your tax bill. So it's a lot, but you still have the other half of your tax bill that is not frozen. And it can go up when the county raises your value. And I'm sure we have some over 65 folks that have been experiencing that pain the last couple of years. So for that reason, we still encourage over 65 folks, 66 plus, let us protest for you. We don't charge much fees at all. We may not save you a ton of money, but it really does. We can save you money, and it really does help your neighbors. Because if your value is left elevated because you have an exemption and you're protected, it technically hurts all your neighbors. So that's why we still encourage folks to let us protest, and we'll do a good job. Okay, so here's some current data. These kind of some small numbers, but hopefully you guys can see this. These are some of the counties that we're in, and I went ahead and kept the 2023 preliminary values up on this chart, and then showed you where we've started to receive 2024 on the left. And then we have a bunch of counties that haven't come out yet. So in y'all's area, we still don't have Nueces, San Patricio yet. It's not out yet. So we just got Victoria in, I think a couple days ago. But you can see in 2023, there were some tremendous increases in virtually every county that we were in. 2024, we're starting to see a little bit more of a mixed bag, some declines, some small declines, no large declines, small declines, small increases in a couple of counties around Dallas and Cameron are still up in the double-digit increases. So it's a little bit better this year so far, but remember that they've also raised y'all for each of the year for the last few years. And so even if you get a decline in your value from the county, you need to ask yourself, is that enough of a decline? Do I deserve more of a decline? And the only way to answer that question is to protest and go find out. Okay, so lastly, I've talked about some of this stuff, but this is one of my favorite closing slides because it's a good review of where we continue to find misconceptions, misunderstandings about how this system works, how it doesn't work. So I'll just run through these real quick, but we talked about the fact that CMAs are not a great tool to fight property taxes. They're very dangerous. They can actually do you and your neighbors more harm than it can help. One common comment we get is my neighbor's value is lower, so mine should be lower too. When you think back to that adjustment complexity that you have to do for property taxes, that is where people that is the part of the system people don't really know about that usually explains why your neighbor's value is lower than yours. And so we look at all that, and we will catch any issues if they're giving your neighbor a better value than yours. Now, if your neighbor has exemptions and you don't, they may very well pay a lot lower taxes than you, and that's because they have exemptions. But your value should be what's called equal and uniform, not equal in quantitative measure, but equal and uniform. And we check for that. I mentioned about the kind of common repairs. These are considered routine maintenance. I've got to paint my house. I have my AC unit went down. All that other stuff is really considered common. It's only your foundations, your roofs, your many, many tens of thousands of dollars of repairs kind of thing that matter. Of course, if your house burns down or needs to be torn down, that certainly qualifies as well. This is a common one we kind of hear, is they look at their value they get from the county and they know they can sell their house for more than that value. So they don't need to protest because they got a good deal from the county. I'll share a story of a real estate agent in Austin who bought a home a couple of years ago. She paid $760 for the home. The county gave her a value of $650. So she thought she was getting a great deal. She was. I convinced her to let us protest it anyway, and we got it down to $610. So that story and that example is just emblematic of how you can't, even talking to a smart real estate professional, you can't just look at a value and then decide, oh, that's fair. That's, I'm good with that. Because until you go protest and actually find out, you don't really know the answer to that question. And so protest anyway. The exemptions we talked about, just because you have those, and you should have those if you qualify, just because you have them doesn't mean that you can't benefit from protesting. So do that. Protesting hurts my schools, police, and fire. So this happened in one of the most public ways last year ever, but y'all might have seen that the state of Texas stepped in and dumped a ton of money on school districts last year. $18 billion. The state gave to the school districts. And when they did that last year, the school districts lowered all of their tax rates because they had plenty of money from the state. So the state will absolutely make up any issues that schools, police, or fire have, and they help step in when budgets are tight or anything. So protesting does not hurt those local services. We still get this one sometimes, but it's a little bit less so. Protesting hurts my resale value. There's no good real estate agent on the market that would ever tell you to either buy or sell your home based on the value that's in the county system. It's not a good proxy of the market. Remember, we talked about the 10 different values for the homes. Those tax values are there at the bottom. All the market values are up at the top. They're very different. So protesting does not and will not hurt your resale value. Now, you might get a buyer that wants to argue, hey, there's a lower value in there, but that, your real estate agent and professional will protect you from falling into that trap, and because it's not a good proxy. We talked about the fact the county cannot raise you if you protest anymore. That used to happen 10, 15 years ago. It doesn't happen anymore by law. And then the e-protest. A lot of counties make it really easy for people to click and file an e-protest. Once you do that, that is your shot. Remember, you get one shot. When you click that button, that's your one shot. Whatever comes back from that shot, that's what you're going to get. If you don't like it, there's nothing else you can do. So if you're okay with that, you just want to click the button, get what you can get, and move on. Totally fine. But just know that that is not a full protest the way a firm like ours does it with the data that we have and the professionals that we have. So that's it. I'll pop out of the presentation, and I hope, if I do this right, share and take any Q&A. If anybody has any questions, anything that I covered that didn't cover well or didn't cover enough. happy to talk more about that.
Hey, quick question. Can you hear me?
Yes, I can. What's your name?
My name is Jonathan. When
Jonathan.
you were talking about the over 65 exemption, you were mentioning that the taxes were frozen. Is that because the value is frozen or the tax rate's frozen at that point?
Great question. In the homestead world, your value is capped. So the homestead exemption deals with capped values. On the over 65, it's actually the amount of tax that you pay that is frozen. So the year you turn 65, whatever value you get, and they generate your actual tax bill for that year. If let's say you end up paying your school district $2,700 in property taxes based on the value you got. You will never pay more than $2,700 in property taxes to the school district as long as you own that home for the rest of your time owning that home. Your taxes are frozen at that level.
Okay, so even if the rate goes up, that doesn't affect you anymore, rate, value, none of it, you're good to go. You can start budgeting.
You are truly frozen and locked in. It's thankfully, it's a great exemption for our senior citizens. And it helps a lot of folks stay in their homes when they get more and more expensive as their income comes down. It's absolutely important to have, apply for it when you turn 65 and know that the year you turn 66, that's when your freeze starts.
Okay, perfect. Do you have a question? You want to come over here and ask it to them?
Or I can, if you want to just, either one, we can turn you. Hello.
I have a question. I went in and I protested my taxes last year. And they told me that the prices of the price of the value of my taxes was gonna hold for 2 years. Is that correct?
So that depends on the county. So each county by law only has to reappraise your home once every 3 years. So there are some counties that don't update appraisal values every single year. They may decide to skip it for a year and just give you the same value you had last year.
That's for.
And then 2 years from now, they'll come around and reappraise you. So they could be talking about that. Do you have a homestead exemption?
Well, I have 4 homes. And I went and argued because not all of them are and they're all different stages of I guess remodeling or the stages of quality homes to live in.
Yeah.
So I have 4 homes and I fought the taxes and they lowered the taxes. So they told me that it was good for 2 years in the Nueces County.
So
Mhm.
you don't have to protest for the next 2 years is what they were telling
Well,
you?
last year was the first year and today is supposed to be the second year. And then 3rd year, I'm supposed to, I guess, protest. Because remember, they gave me 2 years. So this year is year number 2. Last year was year number 1. But I still feel that 1 or 2 houses still could have been lowered the price down.
Yep.
I feel that I understanding everything you explained, and yes, you're right. I
Mhm.
feel like I could push a little bit more because I think I could. And I did exactly the mistake you said. I took my last sales. I pulled all my CMAs and that's what I took.
Yeah. Well, and so if they're saying that they're going to leave your value the flat for a couple of years, that can help you. But the problem is the real estate market has changed in the last couple of years. And so if they give you a flat value this year, that might feel good. But what if the real estate market actually went down a little bit? Then you could be overvalued even though the county didn't raise your value.
Okay, I just want to have I just need to understand this other question. You're saying that you charge $30 plus 30%. So say a house of $100,000, we lower the price to 80, say, I'm just saying. So I'm
Mhm.
paying $30 plus 30% of the 20% of the 20,000, or?
You
that's
gotta
it?
multiply the $20,000 in reduction, you have to multiply that by your tax rate. So it's 30% of tax savings, not 30% of the reduction. So
Craig, does that
Uh,
show if we pull up your website and run an estimate? Will it show her on that address?
we do provide estimates on every home on our website.
Okay.
They are very conservative estimates. A lot of our competition, unfortunately, over promises estimates just to get you to sign up. They get you really excited about saving thousands and thousands of dollars. And candidly, that is not common in
No.
Texas property taxes.
No, I just want to get myself an idea what I am
What you would pay.
savings, or what would be my savings versus,
So in that example, if we lowered the house from 100,000 to 80, that's a $20,000 reduction, times 2% is a $400 tax savings for the year. So $400 times 30% would be a $120 fee.
I understand it. Okay, I understand it.
Yeah.
Your
So
hand-
you would keep $280 of the savings and pay us $120 in a fee for handling that for you.
And letting you have the headache of doing all.
Right?
Letting us have the headache, yes.
I understand it. No, well, see, and it is, for me, it sounds more fair for me because my lifestyle.
Yeah.
Having basically 3 jobs, taking care of a husband, taking care of a son and myself. Yes, it
It's
sounds
exhausting
fair.
choice.
Yes, it sounds
Yeah.
fair, reduction,
Mhm.
or
Yeah.
to have.
Yeah.
That I'm happy to hear you say that. I did a lot of homeowner interviews in launching Home Tax Shield. And what you should know is a lot of our competitors historically have been at nothing up front, but we're going to take 40, 45, or 50% of your tax savings. And when I interviewed homeowners years ago to get Home Tax Shield started, everybody told me that was just too much. 50%'s a lot, 45%'s a lot. So I just started walking down the numbers and I said, well, how does 35 sound? That's okay. And then I got to 30 and everybody's face changed. Everybody felt like, okay, that's fair. And so we stopped there. And that's why we landed at 30. There's nothing magical about it other than I saw a visual change in a lot of homeowners' faces that 30%, it's fair for us to handle. That's a fair fee for us to handle all the headache involved in this part of homeownership. So I'm glad to hear you say that.
Thank you.
Awesome.
Yeah.
Any other questions? All right.
Oh, actually, I have a quick question.
Sure.
Will also help on properties, like, let's say for instance, my example, I live on an acre land, but in an RV. Would you be able to help if we're wanting to homestead that property? Since we live.
We can do those. A couple of things though on that. Land by itself, just land only properties it's really hard to get reductions on. A lot harder than kind of a normal home. And oddly, mobile homes are also extremely hard to get reductions on. The county has to make a big error in their appraisal approach to mobile homes in order to get big savings. So we can do those for sure, but we're very transparent about setting expectations, and they're a little bit more challenging to get truly meaningful savings on those.
As opposed to like a regular home.
Right.
Thank you.
Yep.
Just maybe a little bit outside of your scope, but I forgot the question now. Definitely outside of your scope because I don't even remember it.
I was ready to reach for that one.
Oh, okay. So somebody buys a new house or buys a house, it's a resale house. And somehow the county knows almost what they bought it for, but Texas is a non-disclosure state. The realtor didn't put anything anywhere. Do you know how they're getting that information?
I can only share what I've heard,
Okay.
happens. Now, gosh, there's been a couple of counties, up near me in Austin, Travis County, Hayes County have been sued by the local Board of Realtors for gaining access to the MLS system. So we know some counties, do find a way to get access to that. So that's not, they're not supposed to do that. And the Board of Realtors are not supposed to allow for that, but that can happen. But I'd say the most common, technically fair way that a county gets access to sales prices is they will send the buyer of a home a really official looking letter that says, congratulations on your new home. Welcome to Hayes County. Please fill out this form, and which includes what did you pay for the house. And people feel like they need to fill this out because it's a very official looking form. And so they actually get quite a lot of sales prices and sales data that way,
I actually
unfortunately.
had someone stop by our land whenever we purchased it, like in person, saying, oh, we're part of the county, we're just doing a survey to everyone in the neighborhood. And they asked those questions, and I mean,
Yes.
we just answered them. We're like, oh yeah, that's fine. But now that you're saying this, I'm just like, wow, like they were just trying to get more info. I feel so mad now.
It's super common, but there are counties, God, they'll do all sorts. They do drive-bys like that. They'll come talk, they'll try to ask, can I come into your home? What did you pay? You do not have to answer. I mean, obviously be polite, but you do not have to answer them on any of those questions. You will not get in trouble. There's nothing you're doing that's wrong. They hire drone companies now. They do drone, I mean, they're doing all sorts of things to try to get access to more information and more data. And look, they don't have access to sales data. So they have, if you think, they have a really hard job to do. And I know a lot of homeowners don't like to hear this, but we see what they have. We see what they do with it. We know they make mistakes. We can fix the mistakes and save money. In general, the counties actually do a pretty darn good job with what they have. It's a really tough thing to do all these appraisals almost every year with almost no data. Like, think about trying to do that yourself. Like, that sounds really, really hard. So we like to remind homeowners of that situation. And yes, there's the occasional complete screw up that a county made and doubled your value, and it's ridiculous, and that happens too. But in general, most of them really strive hard to do a good job, but they know their systems are flawed. They know that we know their systems are flawed, and they work with us to identify those flaws and fix them and save people some money.
So if, let's say, someone goes and protests their taxes on their own and the county asks for images or like pictures of the property, is it okay to send it to them, or is that just something that they're trying to gain so that they can raise them the following year?
It's sending pictures is also a bit risky, unless you have completely torn through everything that the county has about your home. And you know that the pictures you're delivering them are not changing anything that's against your favor. So let's use a really kind of potentially ridiculous scenario. Like, let's say you're trying to get a reduction on your home, and you're trying to make the case that your home is in generally worse condition than your neighbors. And so you're taking pictures of your home outside and maybe inside. And one of the pictures you snap shows that you have a pool, and the county didn't have a pool in their system. You just you're trying to protest, but you just showed them that you have a pool. And again, that tax year, they can't raise you technically, unless they would have to do a really quick official reappraisal process on that. But generally they would just note it and add the pool next year. So even photos can be detrimental to the homeowner. And unfortunately, like I said, we have less than 6% of our customers upload anything at all. A lot of the stuff they upload is not that helpful. You know, to see a crack in a wall or to see that your house needs paint or something like that, it's just, you know, they're just trying to do what they can to help. We totally get it. But it's really It's really not. If they go in by themselves and they don't hire a pro and that's really all they have, that's all they have. They have to bring that and hope for the best.
Got it. Thank you.
You
Awesome.
bet.
Any other questions?
No, just a comment, when I went to process, purchase my properties, when I went, they do take they do immediately open up the Google Earth and they look at your property immediately, right in front of you. But yeah, and then also Kingsville, Clearwater County, they send me a letter. They said, oh, I noticed you just bought a house. How much did you pay for it? How did you acquire it? I didn't answer it. I just ignore it. I never answered. They sent it again. I just ignore it. It was a deal that I had done with my brother. So the house was mine. Period. End the conversation. And
Good.
so,
Well, and that's, the Google Earth thing, the counties are getting a lot better than they have been in the past 5 or 10 years. They're getting better and better and better every year at appraisals, which is making it harder and harder and harder to be successful protesting. So the better that they get at this, the harder it's going to be for the average homeowner to protest successfully.
Awesome. All right, Craig. Well, thank you so much. We
You bet, Brianna.
appreciate you, and we will see you on May 2nd in Rockford. We wish you were here. We would
Yep.
take it out to the beach and everything, but hey, great information. Thank you again.
You bet. Y'all have a great evening. Thanks,
Thank
Brianna.
you.